And good morning and welcome. It is March. That means March Madness. This year it means Easter, but it's also time for our monthly market update. My name is Randy Price, along with Maddie Kearns. We're here with you this morning and going to talk to you about some facts, some figures, add some relevant perspective, hopefully, to your repertoire of information. And we'll do this in 10 to 15 minutes to give you, again, what we do on a regular basis, our monthly market update, March 2024. Who are we? A lot of you will be very familiar with the Price Group, family owned and operated, 45 years of experience. We do follow a fiduciary standard. We think that is critical. And we are specialists in the area of retirement. 83% of or more of our clients are retired. When you have a heart problem, you see a heart doctor. When you have a foot problem, you see an orthopedic guy. And we think retirement is all about understanding the complexities of retirement. The Price Group, we have been honored to be recognized by Barron's, Forbes, and the Financial Times. Anyway, this is our what we do, all we do, and hopefully we communicate with you on a regular basis to give you not only information but perspective about that information. Many of you are familiar with Steward Partners, and a word of thanks. The Price Group just on the 22nd of March celebrated our 6th anniversary here at Steward Partners, steward from the biblical definition of stewardship. And at that time when we joined, Steward Partners was about a $7 billion firm. Today, as you can see, 30 plus billion as of December. That number actually much higher here as almost to the first quarter of 2024. As we say here, we do operate as a fiduciary for our advisory clients. We're not owned by a bank, and we now have more than one primary custodian. But Raymond James is our back office, our custodian, where client assets are structured. So that is an update as well as a thank you for 6 years helping make us successful in what we absolutely love, get up every morning and come to the office to do. So everyone is always asking, what's going on in the economy? What do you think about the economy? And wow, it's sort of a tale of two different stories here. Economic momentum continues to build, but as we've said on this slide, cracks are forming. Economic growth continues to be revised upward. You can see on the chart on the left. But you see all these headlines: credit card charge-off, delinquencies hit 12-year highs. There's a reason for that. Credit card interest rates at record highs. Thank the Federal Reserve. There's a reason for that. U.S. layoffs reached the highest since last March. There's a reason for that. Typically, when the Federal Reserve starts raising rates, again, what are they trying to do? They're trying to throw some dirt, some sand into the gears and slow the economy down to control inflation. Unemployment spikes to a 2-year high. FDIC says overdue loans are the highest, but interest rates higher, that will have a dramatic impact on the economy, not all at once, but it will continue to influence businesses, and businesses are there to make money. And when one of their biggest costs keeps going higher, which is the cost of money, they have to do things like let people go. They have to do things like delay capital expansion. And again, all starts to slow the economy down. So we look at the state of the economy. What is your view on inflation and your outlook for the Federal Reserve? Well, you see the unemployment rate, and that spike there, right on the right part of the graph, is on the on COVID, when the government basically said we're going to shut the economy down and then we're going to flip the switch and try to restart it. And then you see the consumer CPI, the consumer price index there on the right. The shaded sections there are where we have a recession. So anyway, many people feel like inflation, especially if you've been to the grocery store, which we all have that habit of eating 3 meals a day. things cost a whole lot more. What is the Federal Reserve going to do? Are they going to cut rates? That's sort of the consensus, the big picture agreed upon. We've been saying the end of the year, maybe the first of next year is where the Federal Reserve starts, and maybe they cut 1, 2, or 3 times. There's again still some disagreement by all the smart experts out there, but from a standpoint that will happen at some point in the future. It's just a question of when. Obviously, as we talk about the economy, as we talk about where we are, we would have to bring in politics. Oh, Randy, oh, Maddie, do you have to? Well, yes, we have to. And we're not going to get into great detail about politics, but perception versus reality. Isn't that true just for so many things in life? Voters are not feeling the strength of the economy as borne out by many of the numbers that we've just talked about. So political realities, economic and political realities on the left, a positive. No recession over the last 2 years. Recession being 2 straight quarters where the economy has not grown. So the economy has expanded, the economy has grown. Household net worth at all-time highs. Thank you to the stock market, etc. S&P 500, which is a measure of the 500 largest stocks in the Dow Jones Industrial Average, are at record highs. Unemployment rates are at nearly all-time lows, and inflation has been coming steadily lower for 2.5 years. And you say, that's in green, those are good, those are realities. But let's look at the other side, the flip side, if you will. Back those of you who used to remember the old record players, what's on the flip side of that 45 singular? But the voter perception, a different story. 50% of the voters believe the U.S. is currently in a recession. We've said many times here that if the government didn't report, it would be very, unless it was a severe recession, most people are not going to know unless they look at the actual numbers, because it's so, the economy could be up 0.1% or down 0.1%. And, technically, if the economy is down 0.1% for 2 consecutive quarters, you were in a recession, but that's a very, very mild recession. We all remember the recessions like 2008 or the recessions like the COVID period where the economy really contracts, and we really feel it because of all the bad things that happen when the economy severely retracts. 67%, that's 2/3 of Americans are worried they cannot cover a 1,000 emergency expense. Wow. 67%, 2/3 of the economy believe the economy is on the wrong track. About 60% of people believe life is worse than it was 50 years ago, and inflation remains significantly higher, about 20% up from the 2019 levels. So, state of politics, a lot of people talking about the elections coming up later this year. In November, we've obviously had the primaries, and the state of politics is big when you get into an election year like 2024. So let's talk a little bit about the state of the election. Trump is leading in the national polls in the major swing states. Current polling shows Trump in the lead, Biden trailing in almost all swing states. Perhaps that changes quite a bit. Perhaps it stays the same. But again, that's where we are. 53% are betting market probability that Democrats maintain the White House. So looking here, I think this slide is really good on perspective, but here's 123 years of bull and bear markets. Obviously, bull is where the market goes higher. Obviously, bear is not where the market goes higher and the market goes down. Bull is green, bear is red in our graph here. And when we talk about secular, secular is from a Latin phrase meaning a long period of time. So a couple things to garner from this slide. Number one, periods, the markets typically move in long periods of time, good times, bad times, if you will. One person responded to this, said, Randy, Maddie, this is very simple. Only invest when it's green. Okay, it's just sometimes you don't realize the extent of a bull market or the extent of a bear market. If you look at the bear market there from 1973 to 1981, there were numerous periods during that bear market, 16 and a half years. The market was up 17% during that 16 and a half years. But again, when you look at that, it was by measure, it was a bear market. And again, that period 73 through 81, you saw there were numerous opportunities to make money, and there was opportunities where you lost money. Same as the bull market there. Following that, bull market is 17.4 years. There were sell-offs and trade-offs, so it doesn't mean it goes up in a straight line, but it just means the general trend. So we've been in an up market, and again, as you can see there, a little bit of red there, June the 30th, 2023. The S&P 500 closed at 4450, which don't get caught up in the numbers, whether the Dow Jones is one or the S&P close. They're just numbers made up of the underlying pieces of the stock. So again, some interesting bridges there, the 1929 through 1955 number, and where we are. So again, perhaps interesting, perhaps very boring, but that's a perspective, a history of bull and bear markets. So wherever we are, and we talk mainly to our clients who are either close to retirement or are at retirement, and one thing is common among that, and they all very much like income. They're income oriented, and so over the years we've developed and refined the Price Group investment process. Discipline, very key term. Income generation are the core principles of what we do on a daily basis. Process driven, what does that mean? Well, it means that we're not just hoping, but we're following the law of large numbers. We're following facts and making investment decisions, not on hope, not on, if you will, thinking that we might get lucky, but doing things that have worked over time and are, if you will, time tested. Our ultimate goal here with everything that we do is to preserve assets while generating the level of income and also growth needed to meet your objectives with confidence. We talk about what happens when you do holistic planning, which is sort of the bedrock, the foundation, if you will, of the Price Group. And for the first time, clients many times can say they have clarity about where they are, clarity about where they're going. When you have clarity, that leads to confidence. Confidence will lead to comfort. And isn't that what all of us are after during retirement? A more comfortable ride. And but to get to comfort, you've got to come through clarity. You've got to come through confidence. Some interesting statistics there on the left, the compound annual returns from 86 through 2022. You've got a couple of different kinds of stocks, dividend growers, dividend payers, S&P 500 stocks in general, dividend cutters, and dividend non-payers. And we're happy to report that we think our investment process is much better from a standpoint of following dividend growth stocks. And dividend growth stocks have been the leaders over time, over just the dividend payers. We like companies that not only pay the dividend, but increase the dividend. And that's actually one of the foundational things that we look at is not just buying the highest dividend paying stock. Hey, Randy, 5% is better than 4%. Why aren't you buying the 5% stock? We like to perhaps buy that 3.5% stock that is growing their dividend, has a history of growing their dividend, a propensity to pay their shareholders more. The old saying goes, the safest dividend is a dividend that's just been paid. So that's a little bit about how we get through a recession, if you will. That's how we get through, if you will, inflationary times. I've said this before, but we felt like the Price Group here, we were country before country was cool as far as dividend stocks. And now you turn on the TV and you hear somebody saying, how do you invest during a recession? Buy dividend stocks. How do you invest during inflation? Buy dividend stocks. And, we agree. But again, it's a process-driven investment process designed that whoever wins the elections, whatever happens with regards to recession or no recession, et cetera. So that's our quick March minute. Hopefully you are enjoying the March Madness with all the basketball on there, but we do appreciate your time. As always, please feel free to reach out with any questions or comments. Contact information there for myself, for Matt. That's Tiffany, that's Matt, myself, Maddie, and Melissa. We are the Price Group. We're here for you. And again, honored for those of you that are clients that you helped us celebrate our 6-year anniversary. 6 years ago, you joined us when we came to a place where we could be a true fiduciary. It's worked very well for the Price Group. It's worked out really well also for Stewart Partners. And we feel again, the trend in the industry is for people going to where they can sit on the same side of the table with the client. We love that. We appreciate, again, your time. We appreciate the opportunity to visit. And if you do have any questions, comments, again, please reach out to us. Have a great rest of the Wednesday and a great Easter weekend as well. Thanks so much. Hope to see you next time. Bye-bye.